So I'm looking at starting a new business. Is there anything you need to think about for the initial setup?
You need to decide on the trading vehicle you're going to use. This is something that everyone needs to think about when they're going into business, either on their own account or with others. And it's not just a decision you need to make at the outset, you need to keep it under review as time goes on, because circumstances change and the things that suit you at the outset may no longer be appropriate later on. There are a couple of basic but connected choices to be made at the outset. The first is whether you want to use a formal corporate vehicle, one that's registered at Companies House. And the second is whether you're happy to be taxed on the profits as they're generated, or whether you want to use a limited company that's taxed in the first instance.
Okay, so what corporate entity options do I have?
The choices are the limited company and the limited liability partnership. They're both formal corporate structures registered at Companies House, and they both project the right sort of image for your business. They both have filing obligations, so that's annual accounts, annual returns, appointment and removal of directors and members. And some of these documents can get quite technical. The annual accounts in particular, you'll probably need the help of an accountant, and that obviously will have a cost, which is something to bear in mind. And importantly, both of these corporate options can provide limited liability. Provided the business is being conducted appropriately, your liability in the event of a business failure can be limited to your investment.
So how does the tax differ between a company and an LLP?
A limited company is taxable in its own right, so that's corporation tax at 20%. An LLP is very different. It's transparent from a taxation point of view. So although it files a partnership tax return, it's the individual owners that are taxed on their share of the profits. That's income tax.
So if the accounts are filed at Companies House, does that mean that everyone can see how much money I'm making?
Most businesses are small enough to be able to file abbreviated accounts, and if that's the case, there's no profit and loss account filed and nobody can see how much you're earning.
Okay, so which one is best, the company or the LLP?
Well, that depends. Companies certainly do have a couple of advantages. One of them is that it's subject to 20% corporation tax, but if you don't take any remuneration from the company, then there's no more tax. The other is that if you do decide to take remuneration from the company as owner, you can take it in the form of dividends, and that avoids national insurance costs for both the company and yourself. LLPs have an advantage in certain situations, professional partnerships for instance, where the members come and go, well, those changes can be made with minimal tax complications.
So the corporate options sound quite complicated if initially it's just a small business.
Certainly, if you're not using a corporate entity, then things do get a lot simpler. You'd either be trading as a sole trader or as a partnership if you're trading with others. There'll be no filing at Companies House. The taxation is similar to that of an LLP in that they're transparent. You're subject to income tax on your share of the profits. A couple of things to note about partnerships though is that if you're in business with others, you should think about having a partnership agreement. And the second is, of course, that you need to file a partnership return. The vehicle you choose depends very much on the nature of the business, its size and your circumstances, so it's best to get advice.